you are benefiting from the interest, the retail interest in investing. And where I'm going with this is GameStop, some of the other things that we're seeing in different areas of the market, whether it's IPO speculation as well, some of these new issues that have doubled or tripled right after coming public. You are there to benefit from that. But is it healthy, Adina? What's your feeling on what we're seeing right now?
Well, we definitely have seen a significant increase in retail participation in the markets throughout the year, both in equities and in options. I think that when we look at the role of the exchanges, our role is to match the buyers and sellers and to provide a proper and accurate reflection of supply and demand in a stock or an option at any given period. I think when we look at our larger role as a self-regulatory organization, we also really do focus on making sure that the activity in the market is legitimate activity, and that if there is any sort of manipulation going on, that we root it out and we eliminate it from the market. So that is also part of our role. I think when it comes to some of the latest activities that we've seen, I'm not going to comment on any particular listings, particularly those that are not listed on our exchange. But I think that in general, when we evaluate how we would manage through a situation where you see a significant run-up in a stock that's not based on news, that's not based on fundamentals, what we do is we do have technology that evaluates social media chatter. And if we see a significant rise in the chatter on social media channels, and then we also match that up against unusual trading activity, we will potentially halt that stock to allow ourselves to investigate the situation, to be able to engage with the company, and to give investors a chance to recalibrate their positions. And then if we do think or contemplate that there may be some manipulation, we then engage with FINRA and the SEC to evaluate and investigate that.
I'm just wondering what you would propose if you were a regulator at this point. So, and you mentioned social media and the way some of these things get started. So you've got and once again, GameStop, GME, it may not be listed with you, but you have someone on Reddit on this popular site saying, I'm not selling until it gets to at least 1,000 plus. So we know what the underlying business of GameStop is. So how would you describe that? What would you suggest would be a action that someone a regulator that might think that this has gotten out of hand? What would you do? What would you suggest happens here?
Well, I think first I would give some advice to investors that if you think it's too good to be true, it likely is. So I think that also focusing on fundamentals and at least understanding the underpinnings of a company's performance as you're making an investment decision, I think is also an important element of what an investor should be considering as they're making their decisions in the markets. But then at the same time, you are correct that regulators also have to consider the latest technology that's being used to spread information about companies. And there is something called a pump and dump scheme that has been a type of manipulation that's occurred in the markets for a long time. But the fact is that's a key element of manipulation that we try to root out, and then we do collaborate with FINRA and the SEC to identify, evaluate, and investigate pump and dump schemes. The question is whether or not this social media activity qualifies in that regard, or whether the regulators kind of have to catch up with the technology that's now available. So those are the types of things that I think that we'll all be evaluating as we go forward, but recognizing also that it is important for investors to educate themselves to make sure that they understand the nature of the markets and to focus in on the fundamentals of the stocks that they're choosing to invest in.
Shepard Smith here. Thanks for watching CNBC on YouTube.